Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and this is your end of day recap for Thursday, June 21st. So, just looking at Red Hat down after the hours. It was one of the I think one of the only big names for earnings afterwards. They had good numbers, but they guided down, and this has kind of been the story with the most of tech. I really haven't been playing earnings too much. Really the retail group has been the group to play for earnings. In tech, a lot of names have been doing this for tech. They're just the expectations, I think, is just a little bit too high for these names, and plus they've been on a big run. I was looking at selling calls on this name earlier in the week. I did not do anything, so I did nothing on that. So let me get to the major averages. I always like to start with the S&P, unless we've got a couple names that are reporting earnings, but besides Red Hat, I think that's basically it. So we did get a little bit of volatility today. I think this is overdue. Just to kind of recap what I've been saying the last couple days is to be highly selective. I been talking about the Qs and the Nasdaq and IWM small caps, which have been, I think, pretty overheated, especially the FANG stocks. They're due for a breather, and I think for me, just kind of taking a step back and letting things breathe and kind of cool off a little bit. I think was the right thing to do, and I think we were just kind of due for a day where we didn't rebound, perfectly. I would have liked to see us go higher, but I think overall, globally, there's just too many things that are moving down, and I think I talked about this, and I went through some charts yesterday, but I think after the video, I went ahead and put together, my spreadsheet of, and I just made just to look at what names are above the 200-day moving average and what names are below the 200-day moving average in terms of, so you could see the whole list here. I'm going to zoom in now. This is country and regions, international ETFs. So this should give you a good picture of why I think there's kind of something wrong here globally. And if you go back to the end of 2017, so what I've got here is basically whether or not the price is over the 200-day moving average or below the 200-day moving average. That's just a really an indication of something is in an uptrend or in a downtrend. And I think at the end of 2017, we almost had things were pretty perfect. Maybe too perfect. The only one I think that was under the 200-day moving average, and I'm going from memory, but I believe I did this exercise at the end of the year. And the only country that was below the 200-day moving average was Russia. It was RSX. Now you've got quite a different picture. So you also have got the year-to-date performance. Notice that the names that are above the 200-day, it's kind of small stuff. Besides Europe, which is this particular European ETF, they hedge out the FX. So I'll talk about that in just a second. But just to take a look, it's Saudi Arabia, it's Norway, pretty energy specific. Some of these areas. Also, Egypt is up 8%. So a little bit one-off type areas. Portugal's doing okay as well. Ireland as well as Israel, but you look at most of the countries, a lot of the emerging markets. Turkey's the worst one, but even the Shanghai is down 12%. Vietnam is down 10%. These were again all areas that were doing really well in 2017 for the most part. So, and then even Brazil is down 21%. India is down 8.3%. The one thing I would mention here is that most of these country ETFs, these international ETFs, they do have exposure to the dollar direct, meaning, so for example, EEM, actually here's a good example. Where's the EWG ETF? Right here, right? So this has direct, it's the equities they're holding a basket of local equities. So you do have direct exposure to the euro. This one, which is still down on the year, hedges the FX, right? So you have no euro exposure. So there's a big difference there, and that's a reason for part of the performance, but that's not the whole thing here with the dollar stronger. So, I looking at this and noticing Asia and Europe were really weak last night. And again, I look at global markets. I'm very much a global investor. I know a lot of retail investors. I'm not trying to pick on the retail investor, but all you have to do is basically look at Twitter at night And most of the retail investors are only looking at like S&P futures. They're like, oh, S&P futures are up. It's really, they're going to move unless there's specific news out. They're going to move on based on what Asia's doing. So, we have a global economy. So we don't just, it does look like going back to the S&P, which is also above the 200-day moving average, probably one of the best areas in the world year to date. But, we cannot, the U.S. market does not operate in a vacuum, and that's why IWM and small caps have been doing better because they have less international exposure. But most companies in the S&P 500, they have exposure to the rest of the world. So if there's some areas that are where global growth is starting to tick down, it's going to affect a lot of these companies. So again, I'm not saying that you have to be that I'm getting crazy bearish, but I'm just being very cognizant of what is going on. So again, I'm not just talking about this because the market's down today. I've been talking about it all week long, and you could look. I sent that tweet out last night in terms of looking at the global landscape, how bad things are really looking here. So possibly we're at, maybe internationally, things are getting blown out of proportion a little bit to the downside. I hope that's the case, but I will wait for some of these areas to improve rather than thinking, I always like to wait for a little bit of confirmation. And if you follow the technicals, I think that's smart to do. You wait for confirmation. By waiting for confirmation, that has really helped me stay out of some trades that have not worked. Okay, so that's the major averages. To talk about option activity, there's a couple names that were kind of this morning that we saw some dip buying in. Twitter was probably the best looking trade, and another name that I would watch is BZUN. They've been buying that name pretty well, but you could see I think Twitter performed pretty well. And we talked about Twitter getting way overbought. I think it was at one point a 90 RSI. It's still overbought, but not that bad as it was. And you could see this is where in this region is where they started buying calls. They bought a lot of they're really picking on not picking in a good way some retail companies. I just can't take a big size position, and on a weak tape. I do think the chart of GPS looks pretty good, and I think XRT looks pretty good, the retail ETF. This made a 52-week high today. I think some people are maybe calling this a cup and handle. So we'll keep an eye on that XRT, and clearly, that's where the the small aggressive chippy type call buying like Hanes. I don't know. I'm not going to throw a lot of money at underwear. But they're the type of things that are seeing call buying. So I think it does pay to be observant and notice, even if you're not going to participate, notice what they are buying. Skechers was another name that has really been beaten up. So you have to be kind of, able to kind of ignore what names they are and say, hey, well, this is what they're buying right now. There was a very nice order of SPY that I think got some people's attention, but you have to kind of take the SPY orders with a grain of salt. We see a lot of put orders in SPY too. Most of the time, SPY is used as a hedge. When we often see more SPY puts and Qs puts for hedging purposes. Because we did see some puts in here too, but this was a nice chunky order. This was $2.9 million. So that's at the end of July 27th. Now I'll talk a little bit. So I've been talking about the negatives, right? Now I'll talk a little bit about. I'm starting to think that we're getting a little bit overdone here in the Dow. The Dow Industrials coming into the 200-day moving average. Let's see what it does here. Same thing with the industrials. I actually put on a tiny little Boeing trade at the end of the day, just thinking that this is starting to get a little bit overdone. In terms of trade worries. And now if they start to make any progress, I mean, I don't know how much worse when you really think about it, what's going back and forth with tariffs. I'm starting to think these industrials, if they make any progress, these things should start to get a little bit of a lift. So that's where I would be maybe concentrating, and letting some of the, maybe let this tech continue to cool off for a couple days, and maybe start to get wash some of all this pent up money that's been going into Netflix and Amazon. Maybe just cool off just a touch, and then you can kind of reload. That's just my opinion there. All right, guys, thanks for watching, and have a great evening.